we have 10 people. Each has put 100K. So we have 1 million shillings that has gone to the bank. Now, the bank then turns around and takes these 1 million shillings and lends it out, and they've gotten 5% for their money. The bank then turns around and lends this money, I would say at anywhere between 16 to 18%, based on the examples you've given for all the banks. It comes to around 18.5. So the bank then lends this money at 16 to 18%. Now, for our purposes, given that majority of what we do is real estate, the borrower in my example is going to be a real estate company, but it could be anyone. And it could be the people that the lady was talking about, the guys who borrowed and were not able to pay. So as a real estate developer, I'll go borrow the same money and I'll pay 16 to 18%. Then I'll go and use this money to develop things like Alma, things like Amara, and pretty much all the 10 developments that we are doing. So if you think about what has happened, these individuals have given 1 million shillings to the bank. They've earned 5%. The bank turns around, lends it at 16 to 18%. Let's say at 17%, that's the middle number. So if you look at the value the bank has kept, it's around 12%. Is if you take this market, because this is a market, it's individuals taking money, putting into a bank, and it's not just a bank, it could be many other companies like an insurance company, an investment bank, but essentially it is an intermediary that takes money and then gives it to those who are going to deploy. This market, generally speaking, is called the money markets. Now, once the money market intermediaries, and principally their banks, get that money, they then lend it out to people who are going to deploy that money, because the bank does not deploy it into any commercial activity. This market where borrowers go to get money, this is what is called the loan market. One of the confusion people make, they go take the 100K, they get into the money markets. And remember, I've just used bank as one of the intermediary. The government is also taking money from money markets. So you take your 100K, you go to the money market, you get a rate. In this case, I've gotten the number from you, it's 5%. Then you also come to the loan market. These are people who are borrowing to go deploy in commercial activities, such as Cytonn to deploy in real estate. And we borrow through an entity called High Yield Solution, or Cytonn Project Notes. Then we give you a rate from the loan market. Then you ask yourself, and I think somebody asked, how are you getting these high returns? Because you are confusing the money markets with the loan market. So it's always important, whenever you are going to invest, or whenever you're giving money and getting a return, you have to first ask yourself, which market am I participating in? Because depending on the market, you will want to get the return that reflects the risks in that market. Because remember, here you are getting 5%, here you are getting 17. There's really no difference between these 5 and 17. They are exactly the same return, except that you've taken on more risk. If you are to take your 17% and adjust it for the risk you are taking, you are at the same point as the person who's taking 5%. But of course, you have to take more risk to get a higher return. If the person who's getting 5% goes to the bank and wants their money back, even if the bank does not have the money, they can call central bank for overnight lending. So it is likely you are going to get your money immediately. If you've invested 100K in a bank, even if it goes down, I think you are covered up to 100K. It might take a while to get your money, but at least you'll get your 100K. So the risks you're taking here are much lower, but it is also reflected in the return. The moment you come into the loan markets, you then have to educate yourself. Like, you will never have to go and meet a bank on a Saturday morning to understand how they generate 5%. It is, any bank can give you that. The moment you want to participate, in loan markets, now you have to do the work. You have to ask, how are you supporting this 17%? How come your rates are high? So you are taking on more risk, you have to do more work, you have to be here on a Saturday morning, and that is why then you will get a better return than than these guys who are making 5%. You'll get 17%, and that's how the world works. Those who are willing to do more work, those who are willing to do more research, are going to end up doing a lot better than those who are going to take whatever the market gives.